Well, looking at the whole Dutch auction system, that was one segment that was also not left out. We actually saw an increase as well of how the Naira was traded. Would this trend continue at least for most of this month, or until after the Monetary Policy Committee meets?
What I see, from experience, this is September, right?
Yes.
We're likely to see this demand creeping into October. That we're likely to see that, because don't forget, manufacturing companies will bring in raw materials with the aim of producing for December, which is usually December, January, which is usually a festive period.
Yes.
And then many of those companies will close down, shut down, and then go on a break. And so you're likely to have an upsurge in terms of demand to bring in raw materials for purposes of producing, towards that. Then those who bring in different kind of commodity items too, this is the period they are likely to going to be opening their letters of credit, and then with a view to actually bring most of these things in, so that by November, as from November, maybe middle of November or something, then because a cycle of 45 to 90 days to get in those things, so invariably you likely to still have this pressure. But beyond that, of course, it's likely to reverse.
What about our external reserves? Because we know that that's where the central bank is taking money from now to, ease the pressure that the Naira is currently facing at all of these markets, as at the interbank, the parallel market, and the Bureau de Change. So how do we expect our reserves to look like, even though everybody says that right now it's depleted to about 0.92%, that's about 46.39 billion Naira, but we're still good.
Yes.
But at what point should we begin to worry?
Well, I will tell you that this year there might not be much worry regarding the reserve. In another maybe expectation is that worst case scenario, you have another maybe $6 billion or so. But don't forget that there are funds equally come from from other sectors, the oil sector, not the oil companies. Yes, you have negative flow. Net. This third quarter, which will end, is likely to be negative. But of course, that will likely turn positive, by the last quarter of the year. And so the pressure on the reserve may not be that much, given the fact that what we've now had from the U.S. In terms of fiscal policy, and then the fact that I think Euro economy as well as the U.S. economy. I heard that in terms of employment, that this last month, for instance, the report was so favorable. So if the trend in the international economy is actually remains stable, within the short-term basis, we are not likely to have too much negative.
So how should investors be responding to this situation now that we have on ground as regards to Naira?
Well, as an investor, foreign investors, for instance, are likely to be more positive, about Nigeria. The only challenge that we seem to have now is the political challenge. You have crisis within the ruling party, and so you cannot clearly separate governance, from politicking. So that's the so if that trend, if it's stemmed, well, that will be good for us. But if the trend should continue, then of course the risk factor becomes higher, from
so is there any possibility of the Naira actually falling in the next, couple of months?
I don't see the possibility. I see a situation whereby the Naira will remain within the band it has been, and towards the November, second week of November, and of course we appreciate, by the turn of December.
Okay, now looking at the variables. Probably when the central bank and MPC actually meets next week, maybe they might decide that they should shift the current band, the broke band for the Naira, where it is right now, which is at 155 Naira 76 kobo. to maybe 160. And if that happens, now, what would the reaction from the other markets be like, the interbank market, the parallel market, the bureau de change market?
Well, unfortunately, I don't see central bank doing that. That is the truth. There are some other things they might do, but obviously not to shift the band. You have a few months towards the end of the year, and I'm not too sure that might be the next thing to do. If you're going to do that at all, maybe possibly, if the trend continues towards the year, then you might look at the new budget, 2014.
2014, yeah. So how will that affect the way they're going to deliberate on the budget? That's the National Assembly now.
Well, I think the much more fundamental is actually the revenue projections to our economy. And then, of course, the exchange rate could be affected if this trend, continues till the end of December. That is in terms of the band. But don't forget, government, on the other hand, too, is looking at the possibility of rejuvenating the economy, from the real sector perspective. And so, if that happens, a lot of things, they're looking at focusing on agri, focusing on some other sectors, the real sector, for instance, and then ensuring that the infrastructure is improved so as to provide support, for the real sector of the economy. So if that happens, I will tell you, there might not actually be real need. In fact, to the extent that they might propose maybe outright ban of importation of some items.
So going forward, do we expect to see the central bank continue to support the naira as it's doing right now? That's
what I believe. That's what I believe. It couldn't have been worse than the environment is likely to improve, for investment. And so if that happens, then we might have a lot, instead of having negative flows, we might have net positive flows. And so that will help the central bank to maintain stabilizing the naira around the band that it has done now.
Next week, the Monetary Policy Committee meets.
Yes.
What would happen now if the committee decides to further tighten its policies?
Well, there are two things. You can look at it. First of all, there are two issues. But incidentally, the central bank is particular about inflation and particular about exchange rate. So, if that happens, if that position, still holds firmly and still
tightened further.
Yes, then we could expect further tightening. You see, the reality of it is, you ask yourself, do we want to see a lower interest rate, or we want to see a higher exchange rate? So it's a choice. You can't attack the two at the same time. So central bank has focused, on attacking inflation and then upholding the exchange rate, and so less on interest rate. Of course, so I still believe that is the direction is likely, to focus.
Okay,
and so that might affect whatever policies.
The last meeting they had, they actually increased the cash reserve requirement on public sector deposit funds.
Yes.
What would happen if the same thing now applies on the private sector deposit funds? What if it's increased from its present percentage point to something higher?
Well, I don't really believe that will happen. That is increasing cash reserve on private sector funds. It might be done in terms of government funds, but definitely not in terms of private sector funds.
So generally, what are your expectations, from the MPC's meeting next week?
My expectation, it's quite difficult, I will tell you, quite challenging to anybody. But I would rather choose stabilizing exchange rate and ensuring that inflation they uphold their reign on inflation. So if that happens, then if that's my choice, then it simply means that interest rate might suffer. So
interest rates might suffer, and that means there's going to be problems also for lending to the real sector, which is where everybody seems to be putting attention on these days.
Well, the challenge is, I ask myself, is the challenge in Nigeria that of actually borrowing? From experience, I will tell you, with viable proposals, you know, from those who intend to borrow, I will tell you, banks will always jump at it. But where the challenge is more is actually infrastructure. That's where the challenge is more. Don't forget that in this economy, we've seen interest rates to 4%, down to 4%. Yet nobody was coming forward to borrow. The funds were there, and then you discover that lending to the private sector was negative. You know, it had a negative growth as opposed to a positive growth, even when lending rate was at 4%. And so that's the challenge. So what was preventing the real sector from borrowing then? So those factors are still there. So until we are able to restructure, you know, the fundamentals, you know, which has to do with the economy, I'm not too sure that the greatest challenge is actually financing. Don't forget that it is in this economy that you have the likes of the Dangotes, you know, that any beck and call, and other conglomerates as well. So because of their size, you know, and then they've been able to deal themselves with the supply of infrastructure. So I think that's what is happening. Okay. But for the others, which unfortunately is not the big, it's not the conglomerates and the Dangotes that will actually prop up the entire economy. It's the real sector. Yeah. So, but until the government addresses the issues that has to do with the real sector, which are fundamental infrastructure. Yeah.
Well, just before we go, I'll let you go, Wale. Somebody actually sent in a mail. It's not directly related, but he's asking, Ola Yonwa Taiwo is asking, what is the Naira value of a dollar as at this morning?
2.10. 162.10.
But as at this morning?
As at this morning, trading has not started before I left the office.
Okay.
Yes.
So, Taiwo, you have your reply there. It's actually 162 Naira 10 kobo to the dollar. But that's the show for today. Thank you so much, Wale, for being a part of the program for today. We look forward to having you again on the show. I've been speaking to the Executive Secretary of Financial Markets Dealers Association, Wale Abe, and we've been focusing on the Forex market, looking at latest developments in the Forex market and how policies have actually affected how business is done.